Life insurance is a type of insurance policy that protects a person's loved ones financially in case they lose the insured person suddenly. It is a contract between the person who owns the policy and the insurance company. The person who owns the policy agrees to pay premiums, and the insurance company agrees to pay a certain amount of money to one or more named beneficiaries after the death of the person who owns the policy. This video goes into more detail about what life insurance is and how it works. When you buy a life insurance policy, you have to decide how much coverage you need and what kind of policy is best for your situation. Permanent life insurance and term life insurance are the two most common types of life insurance plans. Permanent life insurance covers the insured person for the rest of their life, while term life insurance covers them for a set amount of time, like 10, 20, or 30 years. Most of the time, you will need to fill out an application and get a medical exam in order to get life insurance. The insurance company will look at your age, your overall health, and the way you choose to live your life to figure out how risky you are. The premiums you have to pay will depend on what you tell them. In exchange for the premiums paid by the policyholder, the insurance company agrees to take the risk that the policyholder will die and pay a death benefit to the people named in the policy. Most of the time, the death benefit is not taxed, and the beneficiaries can use it to pay for anything they need. Life insurance premiums might be different for each person, depending on things like age, health, and how they live their lives. Most of the time, if the policyholder is younger and in better health, their monthly or annual premiums will go down. Still, when you apply for a policy, you must tell the insurance company about any health problems you already have or dangerous habits you have. This is because the insurance company could refuse to cover you if they know this. The following is an example of how life insurance works. Imagine for a moment that you are 35 years old, married, and have 2 children. You are worried about how your family will pay for things if something happens to you. You decide to buy a life insurance policy with a 20-year term and a payout of $500,000 if you die. For the 20 years that the policy is in effect, you will have to pay a total of $500. If you died within that time period, the insurance company would pay a death benefit of $500,000 to the people you had named as beneficiaries. In this case, those people are probably your spouse and your children. With this money, they will be able to pay their bills. Life insurance gives the policyholder and their loved ones a lot of benefits, such as financial security and the freedom to enjoy life without worrying about the future. If the policyholder dies during the policy period, the life insurance policy will pay a death benefit to the people listed as beneficiaries. This is one of the most important things that life insurance does for you. With the help of the death benefit, the family can get the money they need. Life insurance can also be used to plan your estate because it lets you give money to your beneficiaries without paying taxes on it when you die. In the event that you die unexpectedly, a large enough death benefit will be able to pay for your family's ongoing living costs, such as your mortgage payments and your children's college costs. A life insurance policy can have a cash value account set up, which is another benefit of having life insurance. Some types of life insurance, like whole life and universal life, have a cash value component that builds up over the course of the policy's life. When the policyholder needs money, the fact that they can take the cash value out of the policy or get a loan against it can be helpful. Also, the cash value can be used to pay for future premiums or as an extra source of income when the person retires. Life insurance can protect your family financially if you die unexpectedly, but it also has some problems that you should think about before buying a policy. One of the downsides is that you might not be able to pay the monthly premiums, which could lead to the policy being canceled. Also, getting life insurance might not save you money if you don't have any dependents who would need a death benefit if you died. You need to know that if you outlive the coverage, the insurance company will not pay you a death benefit and will not give you back your premiums. This is something you should remember. Also, the exact terms of the policy, such as the premiums, the death benefit, and the length of coverage, will depend on the policy you buy and the insurance company that gives it to you. Cash value life insurance policies are usually what people mean when they say that life insurance has catches. These types of plans include a savings account that earns interest or investment profits tax-free and grows over time. The broker who sells the policy gets a cut of the settlement amount, though. It is important to remember that cash value policies are, on average, more expensive than term life insurance policies. For some people, the extra cost may not be worth it. This is another very important thing to think about. On the other hand, a term life insurance policy only covers you for a certain amount of time. If the policy is renewed after the original term, the premiums may go up a lot. Some people may find that this makes term life insurance less useful. Before making a decision, it's important to do a thorough comparison of the different life insurance options and think about the possible problems with each one. When making a decision about life insurance, it's important to think carefully about both the pros and cons. If you have people who depend on your income or bills that your loved ones would have trouble paying if you died, life insurance might be a good idea. If you don't have any dependents or financial obligations that would require a death benefit in the event of your death, then buying life insurance might not be a cost you need to make. In a nutshell, buying life insurance is important if you want to make sure that your loved ones will be taken care of financially if you die. If you pay the premiums, you can give your dependents a death benefit that is not taxed and can help cover expenses and give them financial security. If you want to learn more about life insurance, you can talk to a licensed insurance agent.